Good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita and with me is Ankita Saxena. Ankita, the SGX Nifty already indicating a 0.25% of a green start at least. So looks already very positive. But what we will do on this show is we'll take you through all that's happening in global markets. Of course, we had a holiday, so slightly truncated week for Indian markets at least. But we'll quickly take you through what global markets have been up to, and we'll take you through all the news as well as on the business front as well as on the corporate front over the next 1 hour or so. So do stay tuned. But let's quickly start off with global markets. Ankita, how are global markets responding?
So just like the SGX Nifty, Harsh, even the US markets ended the day on a positive note, and that came on the back of the fact that the major bank names gained after passing the Federal Reserve's annual stress test and a revised upward GDP print that really alleviated some of the recessionary fears that have been plaguing the Wall Street. So the Dow Jones Industrial Average jumped 269 points, lifted by the major banking names. The S&P 500 added 0.4%, while the tech-heavy Nasdaq composite closed absolutely flat. JP Morgan Chase and Goldman Sachs each rose more than 3%, while Wells Fargo advanced 4.5%. Now, the action came in a day after the central bank said that all 23 institutions included in its annual stress test as well as capitalized to weather a severe recession scenario. Now, a slate of positive economic data also came out that signals towards an economic resilience despite the looming recessionary fears. Now, that included a large upward revision in the first quarter GDP. Now, the first quarter economic growth was actually 2%, up from 1.3% first reported in the major GDP revision. Now, we also saw a drop in the weekly jobless claims to the lowest level since May. That came in at 2,39,000 last week versus the estimates of 2,65,000. So overall, a healthy economic scenario versus addressing the recessionary concerns that have been doing the rounds in the US markets. So on the back of that, the US markets rallied yesterday. Now let's come to the European markets. The European equity markets closed mixed as investors assessed the commentary from the leading central bankers on the need to continue to fight against the inflation. The Pan-European Stock 600 ended the day up 0.1%, with retail stocks adding 1.8% to lead the gains on the back of a robust earnings that came in from a retail giant H&M that surged 18% in trade. Now, DAX closed the day in the red, absolutely flat, 0.01%, but was ended the day in the red, flat. FTSE also down 0.3%, largely flat, but was in the red. So a mixed cue coming in from the European markets, but a positive handover coming in from the US markets, Harsh.
Well, absolutely mixed from Europe, positive from the US, and let's quickly look at where crude is, really headed at the moment. And when I'm looking at crude, one is, of course, the hawkish central bank commentary continues, and that will spook oil markets. In fact, oil markets were quite soft in any case to start off with that commentary, but even now WTI is below that $70 a barrel mark. You're looking at Brent below $74.50 a barrel. And let's also look at the other piece which was moving in trade, at least with regard to oil. The US Energy Information Administration said that crude inventories have fallen by around 9.6 million barrels out there. So, and the fall expected there was just about 2 million barrels, or just below 2 million barrels. So clearly a larger fall than expected. US seems to be depleting some of its reserves, which is also aiding oil prices, keeping WTI capped at 70 at least at the moment. So WTI below that $70 a barrel mark. Oil not really a concern at the moment with regard to prices.
All right then, Harsh, moving on